you to our PPP Round 2, all questions that you might need to know or have that you would like answered. We'd like to thank you for joining us. Thank you to our panelists, Larry, Stuart, and Lisa. We're going to give all of them a moment to introduce themselves here in a bit. I'm Jennifer Martin over at Shop Local Raleigh, and we'd like to thank the City of Raleigh for their idea for hosting this webinar today, trying to make sure that we help connect all small businesses. Hopefully too, we've also got Black Dollar on here joining us. And so we'll give him a few minutes to talk about himself as well and give us some information about some of the work they're doing. The purpose of today's webinar was to hopefully help answer any final questions that you may have, anything that you're still uncertain about, or questions that you may have about how to actually apply, how do you have redemption, and other outstanding things that may be holding you back from applying. Some of you had pre-sent in questions, and we've got those for our panelists today. If you do have questions at any time, feel free to put them in the chat. At the end, we'll hopefully have some time left for some Q&A. And also want to thank Solido. Solido is a local high-speed fiber internet provider that's locally based here in Raleigh. He's an NC State grad, and they are allowing us to use their platform today to host this webinar. He wished he could join us, share it over there, and kind of give us a few words, but he's out today. And so wanted to at least share some few words about them and thanking them again for their platform. So if you or your business is looking for fiber internet solution for your business, please feel free to give them a call and DM me, chat me up, and I can always go ahead and give you their information as well. Panelists, thank you. Larry, do you want to go ahead and introduce yourself to us?
I'm Larry Moran from North State Bank. I run our SBA and government lending small business group here in North Carolina. We have lenders nationwide. We're a PLP 7A lender, and we've, I guess at this point, done about 1,200 PPP loans in the first round and around 700 in round 2.
Thank you. Thank you. Stuart, would you go ahead and introduce yourself to us today and tell us a little bit about what you do?
Yeah, thanks, Jennifer. So my name is Stuart Patch. I'm the Triangle Market President for Dogwood State Bank here in Raleigh. We're a $700 million community bank headquartered here in Raleigh, and we were founded in 2019, so relatively young institution. We have been heavily active in the PPP lending world. We did about $300 million in PPP loans in the first round and close to about $100 million in this second round of PPP. We have a sort of a unique process at Dogwood. We partnered with a local accounting firm here in town and sort of jointly tackled the program together in terms of underwriting and sizing the loans and originating them. So happy to be on today.
Excellent. Thank you for joining us. And Lisa, I'm not sure if it's Lisa or Rodney joining us here. I'll let either one of you introduce yourselves to us today. I think they might be struggling with a little bit of unmute. Let me try and unmute you.
Am I there now?
We can hear you now.
Okay, sorry about that. So Lisa could not join. I am Rodney Clapp with Fifth Third Bank. I'm a financial center manager on Blue Ridge Road, actively involved in helping business owners this last round of PPP funding, and looking forward to hopefully providing some feedback today and continuing to help small businesses here in the Triangle.
Wonderful. Well, thank you, panelists, for joining us today and for helping share this information. I want to start off with a few questions that we've received, and hopefully you can help clarify as we go along to help everyone understand the best way and what they need in applying for the PPP. The big question we got is, what is the difference about the second draw of PPP loans?
I'll take that one if you want me to, Jennifer.
I love it. Thanks, Stuart.
So the biggest difference is sort of the sizing of the loans was different. For the second round of PPP, a company or sole proprietorship needed to show a 25% decrease in revenue in any quarter in 2020 versus the same quarter in 2019. Obviously, given how the pandemic went, that was the second quarter of 2020 for a lot of businesses. And a couple other differences are the first round was sized at 2.5 times your average monthly payroll for certain NAICS codes and things. But in the hospitality space on this round, there were some businesses that qualified for 3.5 times. That's kind of the main difference of the program from the first round.
Wonderful. Thank you. Thank you. Next one is what documentation do I actually need to have to be able to apply from the PPP?
Well, I'll take that one. The documentation required is generally the same as it was for the first draw loans. However, you don't need any additional documentation to substantiate your payroll costs if you use calendar year 2019 to determine your first draw loan amount. And if you use 19 compared to, and the loan amount remains the same rather, and it's below $150,000, you wouldn't need to provide any additional information where the revenue reduction is required. Now, I will say this, you know, most people don't, when they fill out their IRS form 1040, they don't, technically need any documentation either. But the Treasury and the SBA are requiring you to keep your hands on your documentation, your supporting documentation for 4 years, because we're finding many of these loans are coming up and getting reviewed. So just because you're at the 150 or below marker where your loan request is concerned, and you don't need any documentation, provided you meet those sensitivity tests I just discussed, you could be called upon to provide it. And while I'm on that subject, it's the one thing that both ends of the political spectrum are concerned about. President Biden spoke about it, and Senator Rand Paul spoke about it. There's a renewed emphasis on preventing fraud in the PPP space. And to do that, they are selecting folks. It's not necessarily an audit. There probably is a legal term, it escapes me at the moment, but they're reviewing the supporting documentation. So they are being vigilant. In some cases, the Treasury Department is able to capture fraudulent transactions before the perpetrator even gets the money put in their account. So they are watching. And they're willing, and I believe the quote from somebody was that they are going to attempt to catch every single entity that commits fraud with the PPP program as it was. So.
Thank you, Larry. A question that's popped up live is it correct that the only way you can qualify for a second PPP loan is if you can show a 25% decrease in income for the same quarter in 2019? And I'll put that in the chat box here too, just in case. It's easier to help read it and process.
That's correct, as we understand it, Jennifer.
Thank you, Stuart. Another one was, who is eligible for this round that wasn't available the first round?
I know one group that is eligible this time around is the 501c4, and I do not believe they were eligible on the first round, which is, I think, qualifies a lot of like hospitality venues, things like that, like clubs and things of that nature.
Now, if they received a shuttered venue grant, they are not eligible for the PPP money. So if they went that route, they wouldn't be able to double dip.
Okay. Another question was, can a nonprofit with no employees file for PPP?
In order to, come up with a loan amount, they need to have a payroll expense, I think. So I don't know
Right.
how that would be done. Maybe some of the other people on the line know better than me on that.
They would have to have a payroll expense, and they'd have to be very careful about in-kind donations, so that you see a lot of parsonages, those type of entities where as the funds flow through the entity, money that would go towards I don't know, perhaps a car lease that would be eligible for a PPP loan, had it been for profit, that would not be an eligible expense to meet the 60-40 sensitivity test. So you just have to be careful.
Now, another good one, I think, is someone talked about if they had just started their business in February of 2020, and then the pandemic hit, what do they qualify for? Would they be eligible for PPP this round?
Well, you would be eligible for a first draw, provided that you were in business before February 15th, 2020. And of course, all the rules about evidencing your payroll would come into play in your covered period and stuff. But anything after February 15th, 2020 is not eligible.
How can I get my PPP loan forgiven?
There's a couple different forms for the forgiveness application. They're the two that are the most important probably for this group are the 3508S and the 3508EZ. The S is for loans that are under 150,000, and the EZ form is those that are over 150,000. You can go to the SBA website and pull off the most recent iterations of those forms, because I would recommend people do that when they're applying for forgiveness, because the forms have changed quite a number of times. So probably best to get the latest and greatest. But you go through the institution that originated your loan.
Right.
In the case of Dogwood, our PPP borrower submitted the forgiveness application to us. If it's over 150,000, they have to show the evidence that they spent the money correctly, on the categories that are forgivable. And as long as you have submitted, with that backup, we've seen loans get forgiven fairly easily. We have not started the process for the 2.0 loans, but we've probably I'd say 70% of the loans we did in the first round have been forgiven.
And on that same thought of thinking here, what can a business owner do to maximize their PPP loan forgiveness?
Well, in terms of the way it's changed, originally it was an 8-week cover period to spend the money on payroll, rent. There's a number of different factors that you can spend the dollars on correctly. That time period was extended to 24 weeks if needed. So in many cases, we've found that singularly the payroll expense was enough during that 24-week period to offset the loan amount and get it forgiven.
If you have a workforce reduction, are you allowed to increase owner or other employee pay to meet the 60% threshold PPP requires? want me to repeat that one more time?
Sure.
If you have a workforce reduction, are you allowed to increase the owner or any other employee's pay to meet the 60% threshold that the PPP requires?
I don't know the answer to that specifically off the top of my head, but my first reaction would be no. And, there is a cap on the payroll amount going above 100,000 per employee. So that would be, something you need to consider too, as you're looking at the different individual payroll calculations. But I don't know the answer specifically on that one. I don't know if the other folks do, but.
Stuart's absolutely right about that. The other, if I read this question correctly, if you have a workforce reduction, okay, and it's and you let an employee go for cause, or you attempt, because remember, you're using your payroll averages for a period prior to when you apply. So let's say you have an employee and you had the expense for 2019 to 2020 that you let them go, but you're attempting to bring them back. If the if the employee rather does not come back, refuses to come back, and you have documentation to that effect, or that you had to let them go for cause, okay, those employee reductions, or due to state mandate or municipal mandates where, hey, your, whatever it is you do was due to the pandemic, you weren't allowed to operate as normal, so you had to, let the employee go because of that. You're really not going to have to increase your pay to meet the 60% threshold, because those costs would be eligible for forgiveness, provided you have the documentation to back up that employee reduction, workforce reduction.
Thank you. I think that's helpful. Now, as a small business, do small businesses with smaller PPP loans, do they have to do less paperwork than someone that's applying for more funding and then it's a larger business?
I think generally speaking, I think the answer to that question is yes. As Larry mentioned earlier, we found that during the forgiveness process, loans, particularly over $2 million, which may or may not apply to anybody on this call, have been pretty heavily scrutinized, and in some cases have, called for additional letters of need and things of that nature. As we talked about earlier, the backup paperwork that's needed for forgiveness is not necessarily needed for the application at the time of application. So I would recommend that, kind of regardless of what you see or read, that you do retain those records that back up both the revenue decline and the payroll expense. I just think that you may or may not need it, but it's probably good to have just in case. I will say at Dogwood, we have been collecting those supporting documents on the front end because we think they may be needed at the time of forgiveness. So it's good to have. I think the only other thing I'd mention is the forms for forgiveness are different, as I mentioned before. And for the smaller loans, 150 and under, it's a little bit simpler application for the forgiveness process.
Now, for someone wanting to apply for the PPP and they haven't done it before, what do you recommend as first steps? Is it calling their accountant? Is it contacting you, the banker? Is it going on Google? How do you recommend they start that process?
I think remember, it was put to me this way. This is the Paycheck Protection Program. So the first thing would be to make sure that you have a complete understanding that the program is designed to protect employees and the payroll. So it's not the Small Business Windfall Act or the I Get What's Mine Act or anything like that. It's to protect your employees during this awful pandemic. And I guess we should have started this whole thing by saying, I'll speak for myself, of course, but we're not here giving advice, legal advice or advice as a CPA. So most of the time we refer our borrowers, if we can't answer the question, to their CPAs right away. Now, the instructions are available either on the SBA website. They're pretty simple, under something called FAQs, frequently asked questions, and on the US Treasury website. And they're in order, and they're timely. They're kept up to speed, to include the applications. Now, one of the big changes that has happened recently, and I'm sure most of the folks on this call or Zoom chat have heard about, is the Schedule C change. So those are the folks that can now use their gross income instead of net income in order to qualify for a higher PPP draw amount. Now, I'm sure that question is going to come up from the folks on this call. That starts, actually has started, but the most of us at our bank, we don't have that new application online yet. Now, it's not retroactive, so if you have already applied for your PPP draw loan with the Schedule C and the funds have been dispersed, and your bank has reported that disbursement to the government, you're not eligible for the increase if the increase were to work out for you with your gross income. But going forward, that's a great part of the PPP legislation changes that have just happened that allows more capital to get into the hands of smaller entrepreneurial shops, especially in the Raleigh community. It's just a great program. So I'm sure that question is going to come up. But there it is.
Thank you, Larry. I think that was very helpful. I want to real quick, I know we've got some more questions, but I think here's another good one that just came in. I would like to get these kind of that timely as our attendees are participating. For a sole proprietor applying for the first draw, does she have to show an income decrease from 2019 to 2020? The business only started in 2018 and had a lower revenue in 2019 than 2020, but the actual 2020 revenue suffered because of COVID.
Okay, you have to compare 2019 like periods to 2020. Now it depends on when, on what quarter. Let's say the company, now in this case, this person's question, they had been in existence since 2018, but 2019 fourth quarter, you can compare, if you started in the fourth quarter, rather, you can compare that to any quarter in 2020. But if you were in operation in 2019, it's a comparison to 2020, that 25% reduction. So unfortunately, it doesn't sound like in this case, they would be eligible if their revenue did not decrease compared to 2019.
Hey, Larry, this is Mickey Schnoke from Fifth Third Bank. How you doing, buddy?
Hey, good.
I just want to make sure to get clarity on that question. You're asking if it's a first draw, like they did not take PPP application for round one, correct?
That's correct.
Oh, I'm sorry. First draw. That's correct. Sorry. That's only for second draw, folks. First draw, you're eligible.
Okay.
Yep. So there is no 25%. You don't need to provide. Now, the advantage of where they are in the first draw at this point is you can use your complete year 2019 or your complete year 2020, whichever favors the business more.
That's
correct. You can provide a Schedule C in 2019 or for 2020. So it doesn't have to be it doesn't have to be 2020. It can be whatever is better for the applicant.
That's correct. And if they're a Schedule C, they can obviously, going forward, use the gross income versus the net income. Even if they didn't file, they can fill out the Schedule C and provide that or have that on hand.
That's helpful. Thank you. And panelists, I got noticed that maybe the cameras weren't working. We've reset the passwords, the settings on this. So if you want to try to turn your cameras on, feel free to try it again and let's see if it works this time. We apologize for that not working in the beginning. Next question, while you're trying to figure out if the cameras work or not, is an entrepreneur that doesn't have a strong banking relationship, they can't afford a CPA, is that they need assistance with completing the 941 forms and other documentation. Are you aware of anyone that helps small entrepreneurs to help with assistance in completing their 941 forms?
The SBA has a lot of numerous sources for that, but I would probably refer them to SCORE first. But the SBA has the website's full of guidance where that's concerned.
And I believe I need to check as well the Small Business Technical Center. I'll check, panelists. I can see who wrote that question in, and I'll do some research as well. But I think the Small Business Technical Center also has advisors that help you with that at little to no cost. It is a nonprofit organization that's funded by some state tax dollars. So let me reach out and find out on that answer for you as well. Next question is clarification. Is the decreased income compared to 2019 and 2020, does it have to match from the same quarter to quarter on those decreases?
Yes, it does. Yes, that has to match. That has to be a like quarter. So you and it's calendar, so you can't just say, pick a random 3 months and then peg it back to a random 3 months in the prior year. It's calendar quarter. That's a great question. It comes up all the time.
Yeah, and Larry, I would only echo that. In addition to that, if you did not have a full quarter in 2019, you have to use Q1 of 2020 as your reference quarter. Then you can reference the 25% drop in either Q2, Q3, Q4 of 2020. So if there were no income filed in 2019, you've got to use Q1 of 2020 as your reference quarter. And then again, any additional quarter after that has to show a 25% decrease in revenues.
Excellent. Okay. Another question is, if my bank has not processed my PPP application yet, can I apply through another lender as well?
I'll take that one. We anecdotally have experienced for the second round of PPP a lot more complication with submitting it to the SBA than we did in round one. There's just been there's been some articles written about it, but there were a lot of error messages, cross-referencing things that were in the SBA system, Social Security numbers, EIN numbers, and things that were kicking back errors and not allowing businesses to apply for the second loan for a myriad of reasons. It was just kind of a system issue with the SBA. So in many cases, we were able to push those through. In some cases, it required something from the first bank to do within their system to allow us to get it through. So it kind of depends on the situation, but if you have active communication with a lender and they are telling you that they're trying to get it through but haven't been able to, there is some legitimacy to what they're telling you, I would say. But if your loan has not been submitted to the SBA, you can apply through another lender. But if it has already been submitted to the SBA and just not approved, we've found it very difficult to get any guidance on how to cancel and resubmit or anything like that.
How do I calculate the maximum amount of what my PPP would be?
I can take that. It depends on the type of entity, so and how you file your taxes. So your maximum amount depends also on your NAICS code. So if your NAICS code, which is a 6-digit code assigned to the type of business that you are, for example, 72 is restaurants and hospitality. So anybody that has a 7.2 max code is a 3.5 multiplier. Everybody else is a 2.5 multiplier. And what I mean by that is, so example, let's say we're going to take a S corp or an LLC that files as an S corp, and we're going to take the total, either the 940 from 2019 or 2020, or 4 consecutive 941s from, again, 2019 or 2020. We add up the total revenue paid. Should take a step back. You could also use reports from your payroll company. So, ADP, Paychex, Paycor, they can all generate the amount of payroll that was done over the years. You take that total number of payroll, divide that by 12, and then multiply it by your multiplier. So that's 2.5 for everybody else and 3.5 for anybody with a next code that starts with 7.2. At this point, also the Schedule C, there's been a little bit of change to that, as Larry was alluding to earlier. What used to be, prior to a couple of weeks ago, you had to take line 31, which was your net income on your Schedule C, and you take that number divided by 12, which would give you your average monthly payroll times 2.5 or 3.5. At this point, that there's been guidance from the SBA that is changing to line 5, which is your gross revenues. Here at Fifth Third, we still have not gotten guidance, and I don't know if it's to all banks, and maybe Larry or Stuart can speak to that as well, but we don't know how that calculation is done. My assumption is we're going to take line 5, which is gross income divided by 12 times 2.5, but that has not been finalized to my knowledge. So we're still waiting for that to come forth. I don't know, Larry or Stuart, do you guys have anything that you would add to that?
I haven't seen the IFR yet on it either. And kind of to piggyback on that, as usual with all PPP loans, the maximum amount to any employee is $100,000, their salary. So just whether it's a Schedule C or an 1120, a partnership, whatever, it's $100,000. So.
Thank you for that. Also, just to quickly follow up from the question from before about resources to help you file your PPP, there are free resources, and thank you, Mark, from the City of Raleigh. Mark Weldon is joining us from the City of Raleigh Economic Development Office, and it's SCORE, North Carolina Small Business and Technology Development Center, and as well as Wake Tech Small Business Center. And so at the end of this call, feel free, we can email all of you if you have any questions or need resources or contacts to connect with any of these groups. We'd be more than happy to help you and also help and connect you with these bankers. Going back to a question though is, how do I pay myself with PPP?
Well, once you get the loan funded, it's really just cash in your account at that point, as long as you keep the appropriate records of how the dollars were spent. So, you would pay yourself as normal for the covered period.
So along with that, is for independent contractors and sole proprietors, how do you document the cash that you draw from the PPP loan and to have it forgiven?
Or well, you whether it's 150 below 150 or above 150,000, really you would have to maintain your or retain rather your bank statements, receipts, obviously the proof that you paid for your utilities or mortgage interest or leases, all the eligible costs, that the cost existed, and then your obviously your canceled check or proof that you made that disbursement. And you just have to have that on hand for 4 years.
What should an employer who has received a PPP loan do about an employee who is receiving unemployment insurance that exceeds their normal wages and they don't want to come back?
Well, that, we touched on that before. If this is a question about having a part of your loan not forgiven, that the employee went and refuses to come back, you would have met the test as long as you have proof that you offered the employee the chance to come back and that the employee refused that opportunity. So you wouldn't be penalized if that were the case.
Okay. As a small business owner, I'm confused about how we pay for rent, utilities, etc. when my PPP loan is 60% for employee payroll. The balance remaining based on the formula will not cover rent. What can I do?
Well, remember that the center of gravity for your application was your payroll cost to begin with. Okay, so I think it was, Stuart talked about this a little bit before. You have the covered period to make those payments. So it used to be a higher test. I think it was 75, 25, but at any rate, you really shouldn't be running into that problem. The center of gravity, again, when you applied, was your payroll cost that you proved, or that you had evidence of anyway when you applied. So if the employee left, like the previous question, where they're not coming back, well, that's okay too. You're covered. But really, most borrowers aren't running into that problem. I'm just speaking for us. I won't talk for whether Fifth Third or Dogwood have run into that either.
Yeah, I would just echo that, Larry, that, the loan itself was sized based on, 2.5 times of payroll. And if you're given, effectively, 6 months to spend it on payroll, that would be a pretty rare situation where, the payroll expense didn't cover that. It wasn't designed to cover all of those expenses for the covered period. It was designed to cover payroll. And, if there was any left over, those things could be expensed, rent, utilities, that sort of thing. But it was designed to cover payroll.
Do you suggest opening a separate bank account just to handle all PPP funds should my business be funded?
If you have the ability to, I think it does make some sense to do that. You don't have to. However, I will speak for Dogwood. We required that an account be opened more for sort of the information that's required to open an account, enabled us to get the information we needed for the loan. In terms of just keeping track of the expenses coming out of that specific account, that is not necessary as long as you can document that cash was spent in the appropriate manner. It does not, need to come out of a specific account. But for, purposes of keeping things in order, sometimes it does make sense to do that.
Another question that's come in is, I've seen as recently as yesterday that the government small business support is being extended until June. Does that include the PPP2 applications?
The PPP, if the PPP Round 2 application is scheduled to expire at the end of March. There has been, some chatter about it maybe extending out a little bit, but now if they're talking about, your eligible period or, that's a different thing. But as far as taking applications, the money is set aside until March 31st, I believe.
So going back to the question about 60% covering employee payroll and then the balance, how do they help cover rent and things of that nature? And talking about the forgiveness on independent contractor PPP loans, you talked about documenting utility expenses and et cetera. But since these funds can be used to replace the income of the contractor, how would they demonstrate that? with 65% needs to cover payroll. How does that work for independents with no employees?
Okay, now, if you used your Schedule C from, I guess, 2019, when you applied for your first round, you're really, you show the money going into your account. You know, when you file your tax return, that's going to be the imprimatur right there, that, you know, because you're showing the income. You know, you're showing the money going into your bank account, and there you have it. Now for and it's not 65%, it's 60%. So that the other 40%, if you needed to get there, okay, you would have evidence of the receipts and canceled checks that we just spoke about. Stuart, or you may have something to add on to that, but you know, that's the way if I'm visualizing this question, it's a Schedule C filer, but I'm not sure I understand.
Yeah, the only thing I would add is if you're trying to demonstrate expense spent on utilities and rent and those types of things, you know, just the invoice backup would be what you need there. Or, you know, if it is a company that has a P&L and shows a rent expense, you know, or a canceled check, as Larry said, that would be the way you sort of prove that expense incurred, if that is answering the question.
So going back along that same line, continuing this discussion, since this PPP was designed to cover payroll, and this may have already been touched on, but we're going to expand a little bit if we can. How does a sole proprietor who does not have any employees, how would they qualify for the PPP?
Well, they would use their you know, now this is first round or second round. If it's first round, you would just use the same standards as you know, the first round, you know, the very first CARES Act program, where you would have your Schedule C. Even if you haven't filed, you can provide a copy of what you intend to file. And you know, so that would be 12 months of expense there, and then you would divide by 12 and multiply by 2.5. Now, during the second iteration, you could use 3.5, and up until now, or right now, going forward, you could use your gross income as opposed to your net income. Again, not exceeding $100,000.
So for sole proprietors with no employees and first-time potential applicant, they would most likely qualify for this.
For a first round, certainly, you know, for second round or second draw, rather, you'd need to show the revenue reduction.
Another question is my business allowed to use the employee retention tax credit and the PPP?
Okay, my understanding, and I might be wrong here, that they won't hold, now this is for second draw, folks, and I assume that's the nature of this question, that they've got this grant, and if you didn't get the grant, you would meet the 25% reduction in revenue. My understanding is unless it's a PPP or idle injection of cash, those would count as revenue. I think there is some guidance in it that says any sort of revenue, but the PPP and idle cash would not count towards your 25% reduction in revenue for second round draw. So I don't know if anybody has anything to add to that. That's the last I heard about those programs.
That's my understanding as well on that.
And if you would too, as well, just because you guys are in the lingo every day, would you take a few minutes just to, you know, an answer to explain what idle is for those that may not know?
Idle is economic injury disaster recover loan, which was a grant program that came out right at the beginning of the pandemic, where a business could apply for up to $10,000 in basically a government grant. We've run into a lot of companies that got an EIDL loan and then also got a PPP loan. Originally, when we applied for forgiveness, the SBA was backing out that EIDL loan from the forgiven amount, thus making it not a grant and something that, they in essence had to pay back. We have since, the SBA has reversed their position on that, and we have received, quote unquote, forgiveness for that $10,000. But it was just a different program that was, I think, set up by the state, if I'm correct in that.
It's administered by the SBA. It had two parts. The thing had been around for a while. It's an actual loan. I mean, they taken all business. They'll put a UCC filing on the customer. The part they switched their thinking around on was the advance. So when you apply, depending on the I believe it was the number of employees, or I forget, you got a non-refundable or some sort of grant, and you had to include that when you applied for a PPP loan because they didn't want you to double dip. Now, so many people had done it that they eventually reversed themselves, and so that you wouldn't have to have that grant part of EIDL deducted. Now, the remaining EIDL loan was at 2.75% interest rate and is administered by the SBA, and I think they just opened it back up again. But it's a loan. They filed.
What about, can I switch my independent contractors to employees in order to pay them with PPP money?
I think if you have a 1099 versus a W-2 employee, the 1099 person would be allowed to apply for a PPP on their own behalf. So you really wouldn't be able to do that. And the other side of it is, if you can't make a 1099 out of a W-2 employee, because there are sensitivity tests as to why somebody is 1099 versus a direct employee of your organization. So I would be very, very careful about manipulating things like that. Another one we see has come up, particularly in the case of brew pubs, where they would say, well, you know what, I'm a restaurant now, and I want to use 3.5 times as opposed to 2.5 times my payroll to get the larger amount. You can't change that either. It's whatever you filed on your income tax. So, but back to the first part of the question, I'd be very, very careful about doing that. The 1099 employee they're a contractor. They would be able to apply on their own behalf.
If I choose to apply as a small business, what do you think the risk or the chances of the SBA reviewing or auditing my company for taking PPP funding is?
The SBA isn't going around looking to intervene or inject themselves into the entrepreneur's life. They really wanted, the whole program was designed to get as much capital into the hands of the entrepreneurs to preserve jobs. So they're not looking to do this. Yes, loans over 2 million are automatically getting reviewed, but they're not hunting people down. They have their algorithms with the Office of Inspector General. They know who the frequent flyers are. They know who the people are that were committed fraud when they applied. They have really have great touch where that's concerned, but the average entrepreneur really doesn't have anything to worry about. You think of it as filing your income tax. I would say, the other side of my mouth, of course, I'll speak out of both sides of my mouth, go ahead and mess around with your 1040 and see what happens to you. There's no, that's a non-recourse, unguaranteed, rather non-secured application with the federal government. It's the Treasury Department, but they are so vast. The program is so huge that they're going by exception. At least it appears to me. I'm not speaking for any of the other institutions on this call, but I wouldn't worry. Just do the right thing. Protect your employees. Everybody here that is listening to this has gone through so much the last year and a half where this is concerned. Don't take this on your shoulders and worry anymore. The only ones that have to be concerned are the people that are trying to manipulate this program to get ill-gotten gains, fraud, waste, and abuse.
Great answer. Next, my husband and I own an LLC together. Are we counted as one employee or two when applying for forgiveness?
If they're, I'm sorry, I don't understand it. If it's a husband and wife and they're applying, is this round two? That's a great question, actually. We have some seasonal employers, of course, that have 0.25 FTE and 0.5 FTE. Really, it's the number of people. So whether they're, let's say it's a husband and wife team and they're not doing this 50-50, maybe it's 75-25, it really would count as two. So I think that answers the question and would answer probably the next question about seasonal employees. It isn't an FTE count. It is each person is one person. Hope that helps.
Thank you, Larry. And that's all the questions that I had in advance, or ones that have popped up so far. I know we've got a little bit of time left, and I'd like to see on the bottom of your screen, there's a little raise hand function. If anyone would like to raise their hand to ask a question, or if you don't want to submit it through the raise hand component, you can also type it in the chat box or the question and answer box so that we can ask these experts kind of a couple of your questions still. But while we're waiting and seeing if any of those are coming in, for the panelists, what do you recommend as next steps? Someone's ready to apply. They may or may not have a relationship with your bank. Is there any type of waiting period if they were to come into your bank to try and set up an account to open one to apply for the PPP?
No, there would not be any kind of waiting period other than the time that it takes to get the documentation pulled together and the things needed to open an account. I'm happy to speak with anybody on this call and kind of advise them if they have specific questions. And if I don't know the answer, I'm certainly willing to engage the people that we work with to answer those questions. So Jennifer, if you want to share contact information, that would be fine.
Yeah, there's really no waiting period. I think everybody's flash to bang time, as it were, is pretty good. The program's the same, really. With the rules are equal across the table. We just encourage you to apply quickly before the window closes on this. I don't foresee. I know in the last COVID relief bill, there was not an opportunity to extend this. So I know on the Senate side of the House that they're already starting to wind down some of the previous CARES Act benefits. So I would just encourage anyone on this call, if you haven't applied and you're eligible, please apply. Don't let the the perceived complications get in front of you doing this to protect yourself and your employees. Nobody's going to, give any grief. And the answer is no 100% of the time unless you ask.
Right, and I would just say for Fifth Third, because we're bumping up against, if the March 31st deadline does stay in place, we are taking applications through the 15th, which would be Monday, into business on Monday. We are taking new clients. Unfortunately, we're requiring that it be a 7-day period that you have opened a business account with us. So we're kind of pushing up against that too. So, but I echo the other panelists that please don't wait. I think all of us are eager to help all of these struggling business owners, and it's just trying to help everybody get through this.
Another question that's come in is for self-employed individuals that have multiple businesses with PPP loans. Are we capped at owner compensation replacement across all loans obtained by all businesses?
Can you repeat that question one time, Jennifer?
Absolutely. For self-employed individuals that have multiple businesses with PPP loans, are we capped at owner compensation replacement across all loans obtained by all businesses?
I'm not sure I know the answer to that one off the top of my head. Maybe Larry does. He knows a little bit more of the technicalities of this, but I'd be happy to kind of circle back on it, but I don't know that I know that one off the top of my head.
If the owner, okay, let's say there's 4 companies and the owner wage, and I think this is where this is going, for each company is $25,000, you would be okay. You can't exceed $100,000. If that's where the question was going, I'm guessing that's where the question was going. So
It sounds to me like, I think you've answered it right, because it says, are we capped at owner compensation, which would mean, would they be eligible to earn more if they were getting multiple PPP payments? But it sounds like no matter how many you get or how many different businesses, you're still capped at 100,000.
that's right. And then there is also, for folks that have employees outside the United States, you can't include them in your payroll costs. So I know we have quite a few of those here in the Raleigh area, which is pretty cool, but they don't get to be counted.
Okay, last call for any questions before we let the experts here get back to processing all of their PPP applications. All right, well, Larry, Stewart, and I apologize, at Fifth Third, I didn't catch your name. We're gonna call you Fifth Third stand-in today. So I'd like to thank all of you for coming and joining us, for participating. We hope this was helpful. I've put my email in the contact in the chat section. So if you have any further questions that you need help answering, we'll go ahead and send up a follow-up to all of you. I know some asked if this was being recorded so that it could be shared later with any of your coworkers or partners or fellow business owners that you know, and it is, and it will. So we'll share that email link back to you so that you can watch it and replay as needed. Again, we want to encourage you not to wait, to go ahead and try and submit your applications as soon as you can. And make sure that you don't delay, because this is something that is an opportunity for you to go ahead and try and check out, try and make sure that you take all advantage of every opportunity that's available for your business. Thank you for joining us today. As always, if you have questions, let us know. We're here to support, and we hope to see many of you back next week. Our next webinar will be next Tuesday at 10 a.m. You can go to Shop Local Raleigh's website, and our next topic will be on the COVID vaccine. And as employers, what can you require? What can't you require? What can you ask, not ask? And all those questions that you need to know as you're bringing employees back. So thank you for joining us, and we'll see you next week.
Thank you, Jennifer.
Thanks, Jennifer.
Thank you.